Come on.
Hey Sonia, how are you?
Good morning.
Morning.
Can
Happy
you hear?
Friday.
Yes, happy Friday. Technical difficulties like always. It's okay.
Oh, it's all good.
Are you ready?
Sure. Yeah.
It's I feel like I have you here
Oh yeah,
I,
yeah. That's
in my
that's perfect.
offices.
It's all good.
So how are you before we start?
Thank God all is good. No complaints.
That's awesome. I'm so glad that obviously a lot of people has been asking me about you since I posted the information, especially in LinkedIn. A lot of people from social media, from Instagram, a lot of people reach out. I did posted something today that I was gonna do the Zoom, and obviously I'm gonna download and put the episode in social media. So I'm gonna have your information, obviously your email. I don't know if you want me to add the signature, from your email, so they can actually
Yep.
contact you for, any questions.
That'll be great. Yep.
Phenomenal. So let's start. Let's have fun. It's only about
Sure.
15
Absolutely.
minutes, and we can go from there. My coffee.
There you go.
All right. So okay. So welcome everyone. Thank you so much, and welcome to the Latin Financial Podcast, which we have a special guest, Mr. Michael. Michael, I wanted to introduce yourself. I wanted to talk to you. We're gonna la 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 la. Let's start all over because I'm thinking in Spanish. I was talking to a client right now that everything since 9 o'clock to literally 5 minutes ago, it was in Spanish. Puerto Rico, Florida, and Texas. And it
So my first job, one of my first banks that I worked at was Banco Popular.
No way.
Yep. And I was there for 7 years. So I'm used to the Spanglish for sure. I could somewhat understand it if it's spoken slow, but not really. I kind of get by with it. But I'm good with the Spanglish for sure. So
I
I get
love
it.
that. I love that. See, something
Yep.
else that I know about you that I didn't know.
Yep.
That's
Yep.
phenomenal. So with me, now on, I'm gonna in every email once a week, I'm gonna send you something in Spanish for you to reply. So we
Yeah. It's I don't know what you're gonna get back, but yeah, we could try it. I'm good with it.
I love it. I love it. So no, no,
Yeah.
no. Thank you. Thank you so much for taking the time out of your
Sure.
busy schedule. So, Michael, talk to me about, where you're from and what do you do right now?
So I'm here in Orlando, Florida. Been here since 2000, originally from New York, from Queens. Been doing SBA since 2004.
Wow.
So whether that's good or bad, so I'm a one-trick pony. That's all I know is SBA. And currently with Celtic Bank, I've been with this bank for a little over 6 years. And not only do I produce loans, but I actually manage a team of lenders as well.
Wow. You know what? You said that you've been doing SBA loans for a long time. In this industry, you don't see a lot of people in that, in that type of loans for that long. That makes you know what you're doing. For, first of all, there's a lot of companies out there that they pretend to offer the services. Unfortunately, they don't help, at all. Um, and this I get all the time, the information. Hey, listen, so me personally, I have a lot of contacts in the SBA industry, so I forward. But the process is not as easy, obviously, as everybody may think. I think that that's one of the reasons that I'm so eager to talk to you about what you do because you know what you're doing. You have the background. So can you tell us a little bit about the SBA process and what exactly you do?
Sure. So, listen, there's a lot of good SBA lenders out there.
Oh yeah.
So even there could be people who've done it fewer years than me and they're still very good. But the loan officer you're working with, when you're speaking with them, they should have, as you're talking to them, you'll get a good idea if they really know what they're doing. So for example, when I first look at a loan request, I'm asking a lot of questions because I'm looking at the deal not only to get it approved, but to make sure there's a path forward to closing. Because sometimes you could get a loan approved, but you can't get it closed.
Yeah.
Um, so that doesn't do anyone any good. So I know personally when I issue a term sheet, I would consider it a qualified term sheet in that I've looked at the deal from a credit perspective, looked at the deal from a closing perspective. It all seems to make sense, and I feel comfortable with the term sheet. I know there are lenders out there who um, may not have the knowledge, so they may issue term sheets at will and throw deals against the wall to see if they stick.
Yeah.
I don't do that, so I would rather pass on a deal than do that. So there's a lot of times that I'll have referral partners send me a loan request to look at, and I'll just say, listen, I'm sorry, we're not going to be a good option for you. And I know that makes me maybe it's not competitive sometimes, but at the end of the day, if it's something I know I can't do, I'm not going to waste everyone's time with it too, because I don't believe in throwing a deal against the wall to see if it sticks.
I love
But
that.
I will tell everyone up front, like I usually give a percentage with the deal. Like I'll say, Sonia, this is a 90-10 deal, 90% approved, 10% not, 75-25. And we are going to get the deals. Hey, it's a 50-50. We got the deal has a lot of strengths, but it has some weaknesses, really needs to go to credit for underwriting.
I love that.
So,
At least it's straightforward and you don't want to waste your time, but obviously the most important thing, the client's time.
right.
And especially when they're looking for funding, they're looking to grow. And SBA is always going to be the first route that they should go. Obviously it's a government, process. It has a lot of documents that we're going to talk about. You're going to tell us
Yep.
some of the, a few lists, where can they start. And obviously contact you. All the information is going to be at the end of this podcast, so they can actually contact you with any questions they may have. So obviously we're talking about the 20 years that you have in the industry. And I wrote a couple of questions here, with the experience with the SBA since 2004. 200 million in SBA funding. This is amazing, Michael. This is
That that's probably low by now. It's probably
woo,
more than that by now. Because I've been with, if I did that bio for Celtic when I started, so it's gone up since that.
amazing.
So listen, there's a lot of lenders who do a lot more than I do, and there's a lot of lenders who will do less. So I'm I'm pretty happy with what I've done in my career. So I'm not complaining. It's been rewarding for sure. Um, and the thing is when whatever lender when they're working for their bank, you always have to find loans that fit the bank's credit philosophy.
Yeah.
And sometimes it's easy to do that and sometimes it's not easy to do that. So whenever I have changed banks, you always have to kind of evolve a little bit. I went through some years where we had to evolve, especially during the recession times back in, 2009 to like 11. So, but yeah, I've done my fair share of loans. I'm not going to tell you I've seen everything because I haven't. And there's
Okay.
still times I'll get stumped on things. It is few and farther between, but it happens.
Wow.
And if there's any SBA lender who say that that doesn't happen to, I would have to call them out on that. I don't believe it. So
Good, good, good.
yeah.
We're talking about, changes. Obviously, when you started back in 2004, looking back when you started to do underwriting and actually in this industry, um, yeah, what has changed in the process in terms of about, the underwriting prospect from your end?
Oh, there's a lot more oversight. So I would say deals inherently used to be easier. Um, there's been a couple banking acts that have taken effect that have made it a little harder for like myself as a loan officer to communicate with third party companies. So like there's the Banking Act of Dodd-Frank,
Mhm.
where I am not allowed to communicate with an appraiser at all. So I can't engage an appraiser. I can't talk to the appraiser about the property. I can't do anything with it. So I don't even know who the appraiser is going to be. And it's funny because way back when, even before this Banking Act took effect, there was an appraiser who I used to do a lot of work with. And it was funny. He goes, "This is my livelihood. Regardless of what you tell me, Michael, or what you say, I'm still going to do my appraisal based on the value. I'm not going off anything you're telling me.
Correct.
Why would I risk my livelihood and my license based on that?" And he's 100% right. So maybe if you're dealing with an unethical appraiser or something, but again, I don't know why they'd risk their license. So I think that Banking Act has made it a little challenging because sometimes, you know, even if we want to reach out to an appraiser, hey, I might be financing this property, they think they want to buy it for this. I think, are we in the ballpark or no? Like I can't even do that.
Yeah.
So that's just one example. There's just a lot of oversight now, even with the SBA. So the SBA audits each lender. Um, and they'll do a random review of files. And depending on the audit outcome, really depends how a lender changes their underwriting and closing philosophy. And sometimes it makes it, you could have been with the same bank for 5 years and all of a sudden they get audited and all of a sudden you go to do a loan and now the process is much different because they got hammered on an audit. So it's definitely more oversight for sure
That's
than
definitely, yeah.
than what it was when I started.
You mentioned something very important, obviously not to contact the appraisals. That's the same, the same process as mortgages. Back in the day, you cannot, it for any reason, and like you said, I had relationship prior to the changes back in the day. We're talking about 20 years. That we could either the merchant can actually, set up the appraisal with a company, trustworthy appraisal from the area, and now you cannot. I don't know
Right,
who it is, that comes come back, and
correct,
in a way, I'm glad that it's done that way because it's like you said, the ethical way. They will do it by
right,
the book. But unfortunately, a lot of companies or a lot of people, they cut corners, and that's why I think that there's this changes in guidelines and everything else. It's just to make a better process
correct.
for the client, the company, and the lender. So. But that's actually good. Okay, so let's talk about expertise and insights. Many small business owners hear SBA loan, but don't fully understand the process. Can you break it down? What SBA really means and the benefits for the businesses?
So an SBA loan, the point of an SBA loan, it's the ability for lenders, for banks to lend money where they normally wouldn't if there was not a credit enhancement to it. So the SBA offers the lender a guarantee. So they're going to guarantee a certain portion of the loan. But the SBA is an insurance company. So I'm going to tell you how the guarantee works. So, because there's a lot of times I'll get lenders calling me, hey, you're getting a 75% guarantee on this. What's the big deal? Like, you have no risk. Well, yeah, there's still a risk. So I'll go into that. And the SBA is a giant insurance company. So if the bank doesn't underwrite the loan or close the loan according to guidelines, if a loan does go bad, we may not get our guarantee. So you have to be the lender has to be very thorough with what they do. Um, so when it comes to SBA loans, they're not from a borrower's perspective, you shouldn't view it as hard, but I'd be lying to you if I said it wasn't time consuming. There's going to be paperwork, there's going to be applications, there's going to be different things you'll have to fill out.
Yeah.
But like my process, I kind of spoon feed it along. So when I first look at a deal, I'm asking for the very basic information that I need to review a deal and issue a term sheet. because I don't want to overload anyone with, hey, I need the whole file, like a
Packet.
whole application and everything else. If at the end of the day I'm going to get through 3 documents and say I can't do anything, because I just wasted everyone's time. So I ask for very basic information up front to review a deal, see if there's a deal there. If there is, I'll work on a term sheet. And then once the borrower says, yeah, I like the term sheet, I want to go with you, and they sign it, that's when we ask for the kitchen sink. So I'm going to have them fill out a full application. We're going to have to get all the bank statements. Like we're going to have to get projections. So there's a lot more needed at that point,
Yeah.
but it's still less than the full initial file if I would ask for everything up front.
Yeah.
And then this way, it also lets the borrower know that, all right, the bank really has an interest in the deal. I'm not wasting my time providing this information,
I
right?
like that. I mean, you want to pick, as a business owner, you want to pick the right person to work on your behalf, and not waste your time. We talked about the time issue. You don't want to send your information to a bunch of different companies and obviously submit it. This is not the way to go. I believe that when a client comes in to talk to my company, either Sharp or Latin, we take our time to see if it's a right fit. I unfortunately this past year I had the time to talk to the merchants and let them know, hey, listen, I don't think I'm the right fit for different reasons. The client
Right,
may be looking for something that is not doable. And
right,
it's up to us to let them know, I don't, whoever, from whoever you got this information, it cannot be done. Or, if it is can be done, it's not going to be through our company.
right,
So you have to pick and choose, also because it's our responsibility. We are responsible for the loan. We are responsible for that relationship with the lenders. And you have an excellent. I mean, everybody. I mean, I done my due diligence, and I know that you were working with Brandon back in the day, communicating with my husband at the time. And I seen the emails, and you were very, very professional, and I love that. I know that we talked before here and there, and once you mentioned that you also provide the services not only for your extensive background, but also in Puerto Rico, you got my full attention, because you help small businesses, but you also take the time to help small businesses in the Latino market. And thank you for that, to be honest with
Uh,
you.
yeah. So to further go on about this, though, one really key thing that clients should understand, if we're going to submit a loan into credit and we give them a checklist of items needed to get the loan into credit,
Yeah.
if there's 10 items on that checklist, I need all 10 items. So it can't be, here's 4 items, where are we with the process? Well,
Yes.
here's another 2 items. Where are we with the process? We're still nowhere with the process, right? Like I gave you the checklist. Here's the 10 items I need. The faster you give me the 10 items, the faster we can get the loan into credit. So there's some people who get frustrated where they'll send me 5 items and 3 weeks later they'll send me 2 more. And I'm like, where's the other 3? And they're like, well, where are we with the process? I'm like,
And
we're no.
they counting from the original paperwork.
Correct.
Yeah. It's
Correct. And
yeah.
they don't understand that there's a process, and if they listen to the process and provide what's needed, the loan really moves along at a it moves along quite well.
That's one of the
'Cause
reasons that you're asking for those documents, because they
right,
are important in the process.
they may not think it's important, but we're not asking for it if we don't need it. So the one thing I would encourage anyone who listens to this is, if you're going to get an SBA loan, regardless of who the lender is, if they're asked whatever they're asking for, just give it to them. Because the longer you don't, the longer your loan is not going to move. And because believe it or not, once we have all those items to get the loan into credit, it only takes us 2.5 weeks to get an approval.
Phenomenal.
So
Wow.
that's the thing. I mean, we get a loan approved really quick. Sometimes it's the to get the file into credit, that's what takes long.
The
And
documents
then
are holding the process basically.
correct. And it works the same with the closing process. So once the loan's approved, we get a commitment letter, borrower signs it. They're going to be, I'm going to introduce them to one of our closers. Closer's going to generate a closing checklist. Again, if there's 20 items on the checklist and the bank's going to be responsible for some of them, third parties are going to be responsible, but the borrower is going to be responsible for some
Yeah.
of them. The faster the items on the checklist are done, the faster the loan closes. And it's not going to close before that. And that's what, so a lot of times, believe it or not, people complain about SBA loans, they take too long, but they don't realize a lot of that is in the borrower's hands.
Yeah.
And sometimes it's for good reason, though. Listen, these are business owners, they're busy. I get it, right? And it is time consuming. I'd be lying to you if I said, it's a 5-minute thing. No. Grab your beverage of choice, have some time, fill out the paperwork, do what you need to, and the loan will move.
It's kind of you make me think right now, regardless about those documents, those are the documents that they should, no matter what, have in hand, either through the CPA company, through the accountant, through, most of the documents are, because I've seen the checklist that you
A
sent me.
lot of them.
Yeah, you already have those. You should have those as a
Yeah.
business owner, in your folders, they are ready to go for whatever reasons. And the rest, obviously, like you
There's
said,
going to be some odds and ends that are going to be different, or you have to get, from an insurance company or something like that. So there are going to be that are going to fall outside of that. But you're correct. I mean, a lot of these things as a business owner, I would think you would, if you don't have it, your accountant should have it.
yeah, that's what I'm saying, the CPA
Yeah.
or the accountant. What are the key factors do lenders really look at when deciding is a good candidate for SBA? We talked about the checklist, obviously. We brought to that. But what do you think, like here talking to each other? We're not going to go through the whole checklist unless you want to. They can actually contact you for obviously the checklist, and we're going to have your information ready. But what are the most important documents that they should have on hand?
So here is whenever I talk to any referral partner, I give them a list. And this list goes like this. Whenever a referral partner says, "Hey, Michael, I have a deal I want to ask you about."
Mhm.
First thing I want to know, and probably the most important thing I want to know, this is the whole foundation of the loan right here.
Really want to know.
Okay?
Not just
What is the use of proceeds? What do they want to
yeah,
do with the money? And believe it or not, that's a very simple question, but it doesn't get answered well a lot of times. So I'll get people saying, merchant looking for max dollars. No, we can't do that with an SBA loan. An SBA loan has to be tied to something specific. So tell me, what are you borrowing money for? What are you doing with it? And then you'll get other ones. Merchant looking for 500,000 for working capital. Okay, now we have a topic,
yeah,
but is it really working capital? So again, can you break down the working capital? Because every business owner, a lot of business owners put everything into working capital. They want to buy real estate. I need working capital. They want to buy equipment. I need working capital. I want to buy a business. I need working capital. No, those are all very specific categories or use of proceeds. So if a borrower would ever come to you and say, I need working capital or I need a loan, literally drill down and say, okay, tell me exactly what you need the loan for. Well, I want to buy a business, or I want to buy my partner out, or I want to buy real estate for my business, or I'm renting 2,000 square feet, but the space next to me is vacant and I want to take over that space as well. So I need to expand, or I want to expand and open another location. Now we're talking because now we're getting what the use of proceeds is. And you say, okay, that's great. So tell me how much it's going to be to expand. How much you think it's going to cost to renovate the space? How much you think the equipment's going to be? How much more money do you need for inventory? The more information you have on different categories, the much better it is for the lender. Um, because I can tell you the foundation, the use of proceeds is literally the foundation of the loan. Once I have that, the rest of it's real easy. Sonia, if I have the foundation of a loan, so I need that personal financial statement, always need that. And the SBA, we use the SBA personal financial statement form. It's an excellent form.
Yeah.
If we have that, borrowers, even just last year personal tax return, I'm okay with the last personal tax return. I'm not even asking for three at this point. And if it's an existing business, give me the last 2 years of business tax returns.
Yeah.
Give me a year-to-date P&L and balance sheet and a business debt schedule.
Not bad.
That's all I need.
Not bad at all.
Use of proceeds, personal financial statement, personal tax return, last 2 years of business tax returns, year-to-date P&L and balance sheet, and a debt schedule. There's six things. Now, if it's a startup business, let's
I
say,
was just gonna ask you because
uh,
most of the common questions that I do receive once I posted that you were gonna be available for this podcast, it was like, can you let me know, obviously for established businesses, but also for new
right,
businesses. What is a big difference? But can you tell us? Obviously, you spoke about the established business. What about
right.
for new businesses?
So new businesses, I would classify these in two different categories: franchise, non-franchise. So let's say someone wants to open, all right, you were drinking Dunkin' Donuts coffee a minute ago. So let's say someone wants to open a Dunkin' Donuts. Okay. That's great. So we already know Dunkin's a good brand. They have,
Yeah.
thousands of locations. They're pretty easy to underwrite because they have a track record. So we know we're going to look at the failure rate, whatever the failure rate's going to be, but we know the borrower is going to get training from them. They're going to it's not a real, it's a startup, but it's a proven concept for the most part. Okay. So when it comes to a franchise, as long as it's a franchise that's established and not really new, then it's something that the bank will generally have an easier time with. Um, so for example, we won't look at industry experience as much. So let's say someone wants to own a Dunkin', but they were a school teacher for 20 years and they're done with being a teacher.
Yeah.
Well, we know Dunkin's going to give them the training, right? They're going to give them all the keys to make this thing work. So we're usually okay with that. Then we look at their personal financial statement, other sources of income other than the business they're starting, personal debt. Believe it or not, I mean that takes a key role because are they relying on this startup business to pay their personal debt, or do they have other sources of income that could cover their personal debt while this thing is ramping up? So we look at things like that. Now, if you go to a non-franchise startup, let's just say, hey, I want to open a pizza shop.
Yeah.
It's not a franchise, it's gonna be Mike's Pizza. Well, how long have you been a restaurant? How long have you been in the restaurant business for? Oh, never. It's a good idea I had. Well, sorry. So when you're doing an independent startup business, direct related industry experience is key.
Yeah.
It's an absolute must. The other thing that's generally needed is we need a lot of collateral to support it. Um, and I'll go into the collateral rules with SBA because there's collateral rules. But when you're doing an independent startup, because those are in fact the riskiest businesses to do, regardless of what industry it is, banks like collateral
Yeah.
because of the risk associated with it.
Absolutely.
So franchises you could get a little more lenient, whereas independent becomes a lot more difficult.
Wow. That's a lot of information that, is so interesting, because, I'm learning as you're giving me, information as well. It's like, okay, this should be, and I have certain people in mind as they ask me these questions, in the past 48 hours. So this is awesome. Okay, so let me see what I have. Trends and strategy. Let me see. Small business. Okay. Let me see. What are they saying right now? Business financial, special acquisition. We already spoke about that, which is good. Um, I was going to ask you, what are the trends that you're seeing right now in businesses in financing, and especially for, like you said, acquisition or partnerships, buyouts?
I mean, so we could finance anything. As long as it's eligible, we could look at it. And we finance a lot of different industries and businesses. So I wouldn't say that we see any one industry more than another.
Mm.
Um, I could tell you that Celtic, we finance a lot of special use properties, a lot of hotels and gas stations and car washes and assisted living facilities. Sometimes these are properties that other lenders don't like because it's special use, right? So they view that as more of a risk. Um, we do a lot of that, but we also finance business purchases, partner buyouts. We do debt refinance. We do a lot of franchise lending, startups. So we literally do everything. As far as any trends or anything, I couldn't tell you that there's any one industry that's better or more active than another, to be honest with you. Um, that it's I really don't have that information.
Yeah.
I just know a lot of the loans that we do.
Okay, I got a couple of questions. It's gonna be a little bit of everything here. What is the biggest mistakes that you see a business owner make when it comes to apply for financing? Obviously, you mentioned at the beginning that it was uh, what do they need the funds for? But if they get overwhelmed, what is the right way? I feel like you already established that because you do a original a one-on-one with them, and then you can actually decide if you can actually help or not. Um, so if business owners are listening right now and they feel overwhelmed getting the funding, what is the first step that they should do?
Really, again, going back to my first, understanding the project cost. What do they need the money for actually? Um, because once they know that, if I can't help them, maybe I could direct them,
To
or I
somebody
could
who
say,
can.
Sonia, I spoke with this person. Here's what they need the money for. I can't help them, but maybe if you have a source that can do this, this is what they're looking for. So they really have to identify what they need the money for. That's 90% of it.
Yeah.
It really is. The other thing is when business owners want true working capital. So like we don't offer lines of credit here at Celtic. Okay. So
Did you
sometimes
use
they'll get a
those? Did you
business.
use to before or you never done it?
They may have before, I'm not even sure, but we definitely don't offer the express line of credit.
Okay.
Okay. So sometimes they'll get business owners, we need a line of credit. And I'll say, okay, well, unfortunately, I can't help you. We only do term working capital. Well, that'll work too. Well, no,
No.
no. And because I'll say, well, what do you need this money for? Well, we got to buy inventory and, we got to do payables while we're waiting for receivables. So I'll immediately tell them, no, if I give you term working capital, it's actually going to make your problem worse because now you're going to be repaying our working capital loan for the next 10 years. And after you buy this inventory, you're going to need more working capital to buy more working capital in 6 months. So now you have our debt plus you're going to need more.
No.
So it's the wrong type of financing. If you need a line of credit and you want a line of credit, don't let a lender talk you into, or don't feel like if a lender doesn't offer a line of credit, then fine, just give me the term working capital. Don't do that because you're going to put yourself in a bad situation. Find the line of credit because if it is to buy inventory, if it is to fund your payables while you're waiting for receivables, that's a true need of working capital and the true need of a line of credit. Um,
Absolutely.
the other thing that for failure is when businesses want to grow too fast, too quick.
I've seen those a lot. Yeah.
Yeah, when they want, Michael, I need this 500,000 because I got to expand and do this because we did this and I could get to here next year. And it's like, okay, as long as there's other, if as long as there's other strength to the deal, sometimes we'll be okay with it. But if we see that their personal financial statement doesn't look that good or there's other issues with the deal, it a lot of times rapid growth like that can literally put you out of business.
I've seen
You
that
know,
happening. Yeah,
the
unfortunately.
most successful business owners I've seen and talked to, their growth is like this. It's like it's boring. It's very boring, slow growth.
But it's
But
consistency. Yeah.
a lot of those businesses have no debt.
Hmm.
They have no debt and really good profitability. So listen, every business owner is different, and I'm not gonna be the one to say how they're doing it is right and wrong. That's not for me to say. Because if they're happy and making money and servicing their own debt, then God bless them. That's what they need to do. But just going back to the original thing, understanding what they need the money for is the biggest part of the loan.
I love that.
And
I love this. How can, definitely this is one of the first podcasts that I can tell you that I'm gonna need you back, because all this information is going to be so good and so valuable for everybody that is going to be watching this. I assure you that we're going to have a lot of questions, and I assure you you're going to have a lot of emails and calls. So to get in contact with you, tell us how we're going to put all the information here, but tell us how can they reach out to you, directly if they have any questions.
sure, my email is mhershaft@celticbank.com. And the best number to reach me at is my cell phone, which is 407-615-0329. Calling, emailing, or texting is all fine. And the one thing, Sonia, I always tell my borrowers and my referral partners, I don't care if you call me 10 times a day with questions.
No.
Like, it's totally fine because don't assume you know or think you know and then make a mistake. Like, just ask me the question. Like, I'm not gonna get upset. Oh my gosh, this person's calling me again. No, if you're asking me a question, I get it. Now, if you could if you're able to group the questions all in, like, that's preferred.
Yeah.
But all of a sudden, you can have the one-offs where you need an answer, and I'm more than happy to answer. But call, email, text, they're all good for sure. And I'd be happy to join your show again, if you'd ever want to follow up, because there's a lot more to SBA lending
Yeah.
than it's a great program. And to be honest with you, as we're filming this, our government shut down, so the SBA loans can't even be approved right now.
I was
Um,
just gonna ask, that was the last question. Obviously, because of this happening live right now as of today,
yep.
everything is on hold, obviously. How you, I can imagine the kind of questions about the merchants in the process. What happens to them? It just basically,
It, it's only for right now. It's only affecting deals that are trying to close where the lender does not have an SBA number on it yet.
okay, the loan
But
number.
but there's still a lot of work that can be done. Like we're businesses as usual right now. So I'm actively looking at loans, and we're actively underwriting, and we have deals in closing that we're actively working on, because there's a lot of other things you could be doing along the way,
Yeah.
but we can't get our SBA number
Funded. Yeah.
to fund the loan. So what's going to happen is once the government does reopen, they're going to get flooded by
Loaded.
lenders to get these numbers. So, but you could do a lot. So we're at Celtic, we're business as usual. We're not, we're not phased by it. It's just normal.
Well, thank
It's
you.
gonna pass.
I really thank you. I have jumping into a couple of funding options right now before noon. Is payroll, most of the clients, they need the payroll money today, but I really appreciate your time, Michael. I know that we've been back and forth, and this information is good for everybody, but it's good also with me. And thank you for taking the time. But I'm definitely gonna get you back in here because there's so much information from your end that we can share. So
Right. Abs-
I really thank you for your time.
Yeah,
Gracias.
yeah, gracias. Thank you. Thank you for inviting me.
Absolutely. Muchísimas
Have a
gracias.
good
Nos
have a
vemos.
good weekend.
Bye, you too. Mhm.